and it is the revenge of the bulls today. We had a nice drop on Thursday and Friday. I think I was pretty clear that the expectation was that we would bounce because we hit some really important support levels on the NQ, on the ES, and on the RTY. The NQ and the ES hit the same levels they were at late last year when they were at lifetime highs. So for some funny reason, what used to be the lifetime high is now acting as support. And the RTY also did that, except for a different reason. It hit its Fibonacci because it wasn't at lifetime highs late last year. Nowhere even close, but it had its own line, and they all just about to the penny hit that line and went kaboing. So had lightened up some on Friday. Still not super aggressive right now, but definitely in position, about 100% committed. That is to say, using all the cash, no margin at this point, and giving back part of what dropped in my lap on Friday. That's okay. These are meant to be longer term positions. And even in the midst of all this green, there's some red sprinkled here and there just to keep it interesting. Earnings season's going to be winding down, but there's still some cool stuff coming. Let's jump in and look at the charts together. I've got them all loaded up for you. We begin with a spider. And I talked a lot about gaps last week, and that is exactly what's cooking. The ideal for any bears out there at this point would be for these gaps to be respected and to fall away from them. These gaps were established between Thursday and Friday. That is to say, Thursday's low and Friday's, well, basically it's Thursday's low. That's the anchor point. So this was Thursday. It was a down day in general. Gapped down hard, hung out here. And then today, we've completely wiped out all of Friday's damage. And we're in the vicinity of where we were at the lows on Thursday. But the gap, be it an individual equity or an ETF, what have you, those gaps are the key at this point. And if we just go blasting right by the gaps, then the gaps don't mean anything anymore. At the moment, they do mean something, and that's our point of resistance. Here's the diamond. Now, in this case, the gap has been sealed. And so that's less clean from a technical standpoint. The only thing in the way of the bulls right now is whatever overhead supply exists, which is not nothing. Basically, all these weeks of trading were at levels above where we're at right now. So that's the one barrier to prices easily slipping higher. The cubes, NASDAQ 100, zoom in here, gap is still intact. So we've got the spider gap is fine, the cube gap is fine, diamond, not so fine. It's already sealed, and here's the gap like so. So as you can see, today's high very close to Thursday's low. So that's what I keep yammering on about. And then IWM, in this instance, the gap's been sealed by a little. The gap itself is down here, so we've got a little bit above that. But as with the diamond, the barrier is whatever overhead supply, whatever purchases have taken place in the several weeks prior. Because the narrative right now is pretty easy to grasp. And it's sort of a contradictory narrative. Part of it is, well, these numbers coming out of the BLS are just fiction. They're made up for political purposes. There are these evil people there, and I fired them. I'm going to bring in good, honest people who give good, honest numbers. Yeah, right. And therefore, you'll see how the economy is really growing. So that's part of the narrative. Interestingly enough, the other part of the narrative is interest rates should be and will be a lot lower. You can't have them both. Let's just say that they start making up really good numbers for jobs. We added 1 million this month. We added 1.5 million this month. And now 2 million this month. Everybody's working. This is terrific. So they just make up numbers that look really, really good and are meant to be politically popular. Two things will happen. One, fewer and fewer people will believe the numbers, and they will basically rely on private data services because the government is just junk. It's just in the fiction section of the public library, so why bother? So they'll become meaningless. You know, it's like Soviet Union numbers, like, okay, whatever, you know, it just doesn't mean anything. But what also happened is that if the government's supposed to use these as the basis for interest rates, it's like, well, the economy's doing great, jobs are adding by the millions. We should increase rates, actually. You can't have it both ways. You cannot make up fake booming job market and simultaneously have interest rates plunging unless you decide, inflation, who cares? 10% inflation, 20% inflation, go get them, because fill in the blank. So interesting times we live in, but that is a big part of what's driving the rally today. It's like, this whole bit from last week's going to blow over. Don't you worry, little head, about it. So it does make sense we're getting this bounce, because that was a very sudden and very government data driven sell-off. Overseas, I'm still short the FXI, that is China. China was pretty hot coming into the day. FXI has settled down to some degree. The FXI is up 1.75%. We still have, in my estimation, a failed bullish breakout here. So as we look at the FXI specifically, its own gap, which matter a lot less, because as I've mentioned before, things like FXI are going to have gaps almost every single day, just because they're trading in a different part of the world and very different, is kind of out of phase. But for what it's worth, my stop on that is 37.75, which is just about that gap right there. I used the term robust last week to describe semiconductors, and that they are. I didn't hang on. I got out of my SMH short early on Friday, and good, because not only was its breakdown very, very brief and didn't even close below this line, it's zipping higher today. So all of Friday's damage is done, and we're pushing into Thursday's activity, up about 2% on the SMH. However, my one big champ today is a semiconductor stock. God bless it. We've talked about it before. On semiconductor, ON. I don't track earnings that closely except for the monsters. So it didn't even occur to me that they were reporting this morning, but they did, and to good effect. You and I have talked about this chart a lot, this topping pattern, and we are down on this around 14%. So it's a nice tumble, and huzzah. Some welcome good news on a very green day like this. So on semiconductor, big winner there. Some of the bigger stuff in NASDAQ land, it's not all green. Amazon has continued to sink after its big hit down on Friday. Jeff Bezos, of course, famously sold hundreds of millions of dollars, billions, I think, actually, of stock before all this hit. But yeah, down we go on that. Adobe also down about $10 almost. This is a nice one. I kind of wish I had stuck with it. It just keeps kind of burning up. Adobe's fallen quite a lot. The lifetime high was back 4 years ago, long time ago. And then this most recent inverted, just this rounded top here, we've been breaking out away from that. And we still have, I think, easily a trek down to that major supporting trend line. Meta, however, doing great. It had a sensational Wednesday, of course, after their report. Gave back some of it. So let's get this straight. Wednesday evening, they reported. Thursday, they exploded higher. Friday, they gave back some of the gain. Today, nope, pushing right back higher. So we are a very good day for Meta, and a lifetime high close coming from Meta. Another smaller but very hot stock now, Joby Aviation, JOBY, up about 20%. Lifetime high on that one. I think that's I just call it the fly. It's like a drone, but you can sit in it. It's like a flying car company. Very cool stuff. Microsoft, a little similar to Meta. Explosive move on Wednesday. Gave it up, then gave it up more on Friday. So big push higher on Thursday. Friday slipped. Today undoing Friday's damage, and we're hanging out in Thursday's bar. But Meta is much, much stronger than Microsoft now. It's just a tremendous. While we're talking Mag 7, I'll just say on the Tesla, the old fibs still have their sway on this tremendous amount of magnetism. There's the Fibonacci pair there, and you can see, the price action is getting tighter and tighter and tighter and tighter. It's just gripping those prices. So it's kind of getting some very dull activity here compared to this mayhem before. Over in precious metals land, gold having a terrific day. Front month, so about $32 higher, pretty close to lifetime highs on gold. And in turn, the miners are having a good day. And they are looking like a lifetime high close coming up on GDX and maybe even pushing past this multi-month resistance that's been in place. And a couple of the individual miners we've talked about here positively include DRD, which is up 7.5% today, and Skino, SKE, which is up, though not as much, about 3 2/3%. A couple of just short charts for you. Short charts, ELF Beauty, ELF up a little bit today, but I do like the shape of the breakdown here on ELF Beauty. And then Fluor, this was the big winner last week on Friday, and I'm pleased to see that we're continuing to sink away from that. So this chasm right here, nobody seems to want to venture into that canyon. So still holding that short right there. The VIX is kind of reflecting nicely what's been going on between Friday and today. So the VIX have been grinding around as recently as Thursday in the 14 zone. So went from 14 to the 20s, almost got to 22. And then today, all gone. Basically just wiped, sort of like firing the BLS person. We've deleted Friday from history. It's not real anymore. So VIX down to the cheap zone. Some earnings are coming out, even though we're past the big ones. Axon, I believe, is reporting this afternoon. This is the taser/body cam outfit, AXON. Of more note is Palantir, PLTR, which is currently trading at lifetime highs. Very richly valued company, PE in the 600s. I actually came today short this, and you know what? I just got a funny feeling. I mean, I got out. I feel like I'm playing with fire, so I don't want to stick around. Just watch, it'll fall $100. But yeah, no position in this anymore. Just be a little more serious here. There's no pattern here. I mean, it just goes up and up and up. There's no real reason I should be short this, so I'm not. Yes, it's very expensive from a fundamental standpoint, but I'm more of a shapes and patterns person, not a fundamental guy. So, but there'll be the hot one this afternoon. And in the morning, Caterpillar, a little bit of an older company, but like Palantir, right near lifetime highs. And I am short this one. I don't feel quite as at risk. Last tidbit, the NQ, NASDAQ long-term continuous contract here. As before, we've broken this ascending price channel, and we've been bonking our head against the outside of that. And we took a nice tumble on Thursday and Friday, and now all we're doing is pushing back up toward that line. So if you're a bear, what you want to see is us to re-weaken again tomorrow away from that line. That's the line in the sand that must be watched.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.